Hi there, how are you? Welcome back to M Talks. Today, the banks are the backbone of our financial system, not just for the economy, even for us. All the monies that we have flow through the banks, in and out of the banks. And there are two types of monies that come out of the bank. One that we don't have to pay back because it's our money. We have left it there in savings bank or in whatever other form. The second is what we have to pay back because the money belongs to others, which the bank is channelizing to us as a loan. And that's what we're going to talk about in this video. The moment we say bank loan, a lot of warnings that come our way, a lot of logic that is thrown at us. Let's look at some of them and their relevance in the current scheme of things. First thing being, never borrow unless you have to. And then they say if you borrow, it would impact your financial status. People would assume that you're financially not very stable or not very strong, and the perception will be there that you are not very comfortable. Okay, let's not worry about that too much, but I will pay a certain amount of credits to not having to borrow or not borrowing when you don't need to. But let's look at the need perspective, given the current scheme of things. For example, I'll give you a small example. You want to buy a mobile phone because your phone just got lost or broke or just shut down. And the money, the cash at your disposal is limited. Or rather, what you can afford to spend at this point in time, at any given point in time, is only so much. But then you have these schemes from the banks, consumer schemes or deferred payment schemes. So you can actually afford to buy a phone which is state of the art, which is something, the functionality is something you need. But otherwise, with the money at your disposal, cash at your disposal, you could not afford. But then you have a loan or a deferred payment scheme that allows you to buy this and pay over a period of time. What's the harm in that? It's actually a blessing in disguise. Yes, maybe you pay a certain extra cost. But then, if you were to buy a phone with the monies that you had, a phone that is not as functional as what you can buy with a loan, then imagine maybe over a period of time it will run off out of its utility and you have to buy another one. So, look at the replacement cost. But then let's also look at why people say these things. There must be a reason for it. And if you look at it, it goes way back. Before the banking system is the way it is now, before there were even banks, people had to borrow from unscrupulous money lenders, especially if it is a small borrowing. If it is a big time borrowing, fine. Small borrowings, and these money lenders, they decided the interest and they actually were so unscrupulous and they exploited people to such an extent that it became a misery for people when they took loans. Their belongings had to be pledged, which was never given back, and they lost their livelihood, sometimes even the dignity. So, which can be really hurtful. So, that's why there is this always caution and warning, especially from the elders, don't take a loan unless you really have to. But today, the banking system is so well defined. Everything is structured. There is a central bank, there is a government regulating and making sure there are laws to protect the small borrower. So it's not so much of an issue anymore. So we have to look beyond that and see how we can exploit whatever opportunities are available in the market to make our lives more comfortable, our lives, more progressive. The second thing they say, never borrow more than you can repay. Now, let's look at it from the current perspective. If you go to a bank, you don't decide how much loan you're going to get. Based on your income, based on your revenues, the bank has got a risk model where they decide how much loan you can get. So it's not really in your hands. And for example, if for some reason they decide that the quantum of loan is so much and that is less than what you need, then you have to look at alternatives or additional loans. Or If, for example, the quantum of loan that they say you're eligible for is more than what you need, then what do you do? When people say, no, 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 take only what you have to. No, but I'm saying otherwise. Take all of it. For two reasons. One, of course, there are some options where the loan quantum is approved and you can withdraw whatever you need and you're charged only based on that. However, if you need additional money from whatever is approved, you can always withdraw. Now, it's okay if that option is not there. Even assuming that option is not there. So you draw all the money and you need only certain component or certain portion from that. So the rest you can actually put it as a fixed deposit in the bank. And whatever interest you get from there can offset whatever cost that you're going to pay for the loan that you're taking. A little bit, may not be completely, but a little bit. The other way I will look at it is as a forced saving. See, the banks themselves have figured out that you can pay or you can service X amount of money per month, which means if you're financially strong, you should be able to pay that money. If you're financially disciplined, you should be able to pay that kind of money. And if you pay, you know, make sure that you complete the loan, that quantum that you didn't need becomes a forced saving. You get what I'm saying? So that's something which otherwise you would not have saved because okay, fine, saving is sometimes the last thing that we do. But this, when you have to pay a loan, that's probably the highest in terms of priority because there is somebody breathing down your neck. So look at it that way. Third thing, do not take loans for long periods of time. Take them only for short periods of time because the interest cost will be high. Sure, I agree. The interest component will be high if you take it for long periods of time. What I mean to say is, if you take loans for longer periods of time, the outflow, what you have to pay per month or whenever, per quarter, or however you are paying, becomes smaller, easily manageable. So it doesn't really hurt you or hurt your other expenses or make your living difficult. Yeah. Fourth thing, pay up your loan the moment you get money. Close your loan. Don't keep it open. Why? Because you never know. You've got a quantum of loan which you're paying. You have understood that you're going to pay it over X amount of years or X amount of months, and this is the quantum you're going to pay. And you have been paying it for a while, which means you already have a financial discipline, a plan, and you're paying. And if you by chance get some additional money, for example, you get a bonus or you get an unexpected incentive, now that money you can use to actually make an investment, to make some money out of it. And that incremental money that you make out of that investment can offset the cost of your loan to a large extent. Our thinking has to be slightly different. We have these opportunities that we should exploit. And before, it was not there. Before, banks were more focused on wholesale. They wanted to put $100 in one pocket rather than put $1 in 100 pockets. But today, their thinking has changed. They're more focused towards retail. They're facilitating more retail loans, more retail products. And I think we should utilize the opportunity to better our living, to better our standard of living, to better the way we function as well, because a lot of things that we can we have access to because of these loans we never did before. And the fifth thing, never take a top up loan, meaning that you have paid a certain component of the loan over a period of time and that component is available back to you from the bank. Don't take it because that is like you're getting into a rut and you will never get out of this kind of a what should I say, thing that they keep telling us. But no, why? If you have good use for the additional money, why not take it? It makes sense because, again, like I said, the opportunity is available. And then you have that money at your disposal. If you see a good investment opportunity, something where, if you didn't have money at your disposal, you would have to go running at that point in time to figure out how to, lay your hands on that kind of money. But instead you have it. But only thing is, be wise not to splurge, not to waste it, not to just, what should I say? Okay, this money is there, so might as well use it kind of a scenario. That happens if you have that kind of an attitude, then it's slightly difficult. But if you, like I said, are disciplined and you have been disciplined and you've been paying up the loan, then you understand the value of this money. So I am sure you would use it prudently. And then the last but not the least, never do a balance transfer. What I mean by balance transfer here is that sometimes when you have a loan with an ex bank, Y bank approaches you and say, I will give you the same amount of loan, but at lesser interest. There might be some charges when you switch over from bank X to bank Y, but it does make sense because once bank Y gives you the loan and you pay bank X, first of all, your interest outflow comes down. Second, as far as bank X is concerned, you have paid the money back, which means you're a good customer. Okay, maybe when you actually pay the money back earlier than you had scheduled, there might be some charges. But these are calculations that you have to weigh, you have to figure out and see which is better for you. But then what happens is that if it turns out to be a good option, then you should do it, because then with bank X you have the loan amount eligibility back again. So again, if there is some opportunity for you to use the money, invest, or work with it smartly, do something with it, you have that opportunity. So look at it, folks. Banking is become more structured, and most of the transactions or the interest rate costs today are very transparent, and you can go shopping. So I don't think a bank is going to hide or do any shady business with you. They cannot do, because they are governed by a central bank and the government as well. And there are laws, like I said again, to protect the small borrower, protect our interests. So it's not that kind of a scenario where all these unscrupulous moneylenders took advantage, exploited people, and made their lives miserable. So like again, I'm repeating myself. We have an opportunity. We have to utilize it to better one our standard of living, have more access to things that can actually help us make more income, improve our lifestyle, progress in our lives. Look at it that way. This is what I wanted to share with you in this video. Thanks for your time. Thanks for listening in to me. Until we meet again, stay safe, stay healthy, stay happy. Bye for now.